Sometimes in day trading, you will see different patterns at the same time. One pattern give you a buy signal and the other will give you a sell signal. Which one do you choose? Here's an example. As the market develops, we see an open triangle here with two trend lines. The market respects this trend line very well. You can see that it just touches. Here it appears a little bit, but that's okay. And then when the market goes up to touch this top trend line again, and then give you this very good signal bar, the bear bar has a very big tail at the top, which means the sharp reversal of the uptrend to the downside. And also the body is leaning towards the downside of the candlestick. So it is a very good short opportunity based on this open triangle. The next bull bar will trigger your order. However, in the end, you can see the market didn't go down any further. Instead, it goes back up and then give you a stop out. Based on the open triangle pattern, there's nothing wrong to short here. However, you didn't have a successful trade, and then this one becomes a bear trap. If we take a look at the same chart differently, we can see a V reversal here. First, let's draw some important levels, previous close and previous low. The market respects these two levels very well here, so especially here we can see the support, which means the upside pressure. Then we see the V reversal setup. First, we have this sharp reversal, so it goes down and then reverse sharply. Second, we have this breakout with 1, 2, 3, 4 consecutive bull bars, and then there are big trend bar here. 3, we have this high, but the market makes another higher high. So this high is higher than the previous either major high or minor high. So this is the setup for the V reversal. Then we wait for the pullback. This bear bar is the pullback. And then we want to see a signal bar as the bull bar. So this is the bull bar signal bar. And then after this bull bar finishes, we go long. You can see that this V reversal gives you a successful trade. Another thing is that you can draw a trend line here, so the market respects this trend line well, and then it breaks. So you can also treat this as a break of the trend line, and then trade the pullback. So this trend line at a smaller scale will confirm the V reversal setup to the upside direction. Which one do you choose? V reversal or open triangle? Basically, there's nothing wrong with either setup as a beginner day trader. However, there are a few things you should notice. First, for open triangle, normally the legs will be very slow. So for this leg, it goes up too quickly, so it is not very normal as an open triangle. Second, take a look at the whole chart here, and especially this part. You can see that the down leg is very choppy, very slow. That means the buyer is accumulating the power and the seller is reducing their power. That means the upside pressure is getting larger. Especially when you see this breakout, that means the buyer dominates the market already. So at this moment, going long would be a better option.